INFOSYS surprises the street with better than expected Q3 numbers. Revenues jump 6%. The company also ups its full-year revenue growth guidance. The stock soars almost 17%, its highest single-day gain in the last 4 years. INFOSYS chairman KV Kamath says it's too early to talk about a turnaround, and one strong quarter cannot be taken as a benchmark. Kamath, however, says there are some signs of green shoots in some domains across the globe. Industrial output contracts marginally in November, even as capital goods and mining take a beating. Planning panel Deputy Chairman Montek Singh Ahluwalia blames the delayed festive season for the poor show. Brace yourself for a fuel price hike. Congress Core Committee will meet later today to take a final call, but the Oil Ministry has proposed a 3 to 4.5 rupee hike in diesel prices, while for LPG, the Ministry is seeking a 100 rupee hike per cylinder. The Who's Who of India Inc. added glitter to Narendra Modi's vibrant Gujarat, from the Ambani brothers to Ratan Tata and Chanda Kochar. All raise a toast. Mukesh Ambani commits fresh investments of 1 lakh crore rupees. R.C. Bhargava says work on the Maruti's new plant will begin in the next couple of months. Good afternoon and welcome. I'm Faye D'Souza. Let's move straight to our top story. INFOSYS surged 16% in trade today after the software company unexpectedly hiked its full-year revenue guidance. INFOSYS sees its FY13 revenue forecast at $7.45 billion. Now, this is better than the $7.34 billion projected by the management earlier. Dollar revenues in the third quarter were up 6% on a sequential basis. Nonetheless, the management says it remains cautious and optimistic over the next few months.
As far as the year is concerned, we are cautiously optimistic. We are keeping the organic guidance of 5% for the year. This implies a growth of 2.7% organic in Q4. We closed 8 large deals amounting to $700 million in TCV in Q3. Our client additions were pretty strong in Q3. We added 53 new clients. Growth has been all around. Actually, the growth has been broad-based. The environment is still volatile. It is still challenging. US is going through various challenges. The financial industry is undergoing serious regulatory and other challenges.
Our integration with Lodestone has gone very well. We are working on the synergies between the two. And, we expect this acquisition to be EPS accretive in the next 18 months. We will have an additional charge of roughly about $8 million every quarter on account of deferred compensation and amortization of intangible assets.
Well, for a closer look at those INFOSYS numbers, let's bring in Sunita Nagpal from our research desk, who joins us now with more on those Q3 results. Sunita.
Indeed, it was thumbs up for INFOSYS, whether you look at Q3 performance or you look at the guidance that they've maintained at same level as earlier. If you look at the performance, their revenue growth momentum is back. Annual revenue growth was higher than expected. Margin decline was lower than what the street had expected. Although the analysts went in the results with very, very low expectation, but there was a positive surprise. The company came out with 2% volume growth. Pricing improved by 3.2%. Remember, pricing has been one overhang and a concern for the street. That was a pleasant surprise. And the most important thing is the annual guidance, organic growth. Annual guidance was maintained at 5% growth. Although including Lodestone, the company now expects to grow at roughly about 6.2%. And if you go by the guidance, then they are also implying that the Q4 they will see revenue growth of roughly about 4% plus, and which is positive. So what analysts are now saying is that INFOSYS is exiting 2013, FY13 with a very strong numbers, and so FY14 might be good year for them. They're already up the EPS estimates for FY14 from 174 consensus to roughly about 178, and they're expecting a re-rating and some shift from TCS stock to INFOSYS. That's what they're expecting. And despite the pop-up we've seen in today's stock of 16%, they're not ruling out further up move in the stock in coming months if the INFOSYS is able to maintain this momentum going forward.
All right, Sunita, thank you for that information. Now, staying with that INFOSYS story, The chairman of INFOSYS, K.V. Kamath, feels there are visible signs of green shoots sprouting across the IT sector. In an exclusive interview with ET Now's Chandra R. Shrikant, Kamath told us that the confidence does not necessarily go up just because of one good quarter. It also requires a collective team effort and a sustained set of positive numbers. Take a listen.
Numbers can be different from what you thought they were, whether it's growth or whether it's margin. Indeed, I think the team worked very hard to get this strategy right. As I said, in the industry, for the industry, I see green shoots where there weren't any earlier. And that should help if you position your product properly and your offering properly to get margins right as they were. Whether margins will remain exactly what they were in the past, difficult to say.
Okay. You have a reputation for a man who's hungry for results. So based on the recent performance, has your confidence sort of gone up in the company and the management?
See, confidence does not necessarily go up by one quarter's results. I think confidence goes up by effort put in over a period of time. And this effort was being put in over quite a long time in the last 3-4 quarters, I would say. And it is, some visible fruit is being seen now. So we need to see that, ensure that it continues into the future. And that will be the endeavor of the board.
All right, let's move on to other important numbers that came out today. Dashing hopes of a rebound, the industrial output numbers for November contracted to a 4-month low at 0.1% versus a growth of 8.3% we saw in October. Capital goods and the mining sector have taken the big beating. Planning Commission's Deputy Chairman Montek Singh Ahluwalia blamed the delayed festive season for the poor show.
The base effect has operated in two different ways. When you got a high growth rate, 8% in October of 2012, it was because the base was near zero. And the base was near zero because Diwali last year, I think, was in October. So you get a few days of holidays, production doesn't get completed, data doesn't come. This year, Diwali was in November. So what you've seen is a dip in November. This dip, this 0 point whatever it is, was actually compared to last year's growth of 6%. The 8% in October was on a previous year's growth of minus something. So actually, I mean, if you put the two together, then what you're seeing is an industrial growth on average of 4% compared to an average of 3% last year. Not very strong. I mean, that's very clear. But the limited point that I think we should make is this data does not contradict the proposition that the economy has bottomed out.
At the Planning Commission, they're giving us a response. We've had other reactions come in through the day from industry and market bigwigs on that IIP number. Take a look at some of the reactions today.
If this kind of trend continues in the rest of the year, then IIP numbers would probably look better than the earlier part of the year. Having said that, even 5% IIP growth is not good enough for India. We need to get this number up to the double digits. But at this point of time, even if we get up to that 5% mark by March, I think that will be a pretty important achievement.
I don't think capital goods sector, will do significantly well from here. And in my opinion, it is still 3 to 6 months away, before you start seeing some serious investment or serious accretion to the order book flow. So in my opinion, even if the interest rate comes down, I share the view that probably investment cycle may not begin, in a significant way, because the core of the issue for capital investment is lying somewhere else. It's not only the interest rate. Interest rate probably would help in terms of, bringing the interest cost down and probably to the consumption side, but not to the investment side.
So I'd split the problem as the large infra big projects and the more consumption-oriented, regular, livelihood-related businesses. There is a stark difference in approach and expectations. One led by some of the more buoyant consumption numbers and supported by likely changes in interest environment. The bigger projects are looking to see how the supply side issues are going to get addressed, because that remains a challenge. Except for some pronouncements, it hasn't yet turned into action.
It appears that we are seeing the bottom of the decline in industrial production, and we should see a pickup more particularly in the last quarter of the current fiscal. Therefore, it is not necessarily the base effect, because if you look at it in terms of the index of the previous month, also it has come down. Therefore, the only thing that is we can draw from these numbers is that certainly the decline in production is bottoming out.
You can't go on capital goods and project growth on a month-by-month basis. And we are a 1.2 billion people. I think lots of them are poor people who we subsidize by one way or the other. They all ought to get jobs, but we create the jobs in China. And today we are running $160 billion trade surplus. The import which has taken place in the meantime is $250 billion in the last several years. And what we have exported is only raw materials. So all the manufactured goods come here. So it is bound to suffer. Not only capital goods, even the other manufactured product will suffer because of single factor, China.
Well, we've had more bad news today. The trade deficit number for December came in at $17.7 billion, compared to $14.4 billion in December last year. Exports, however, fell for the 8th straight month. Exports for December came in at $24.88 billion, down nearly 2% on a year-on-year basis. But the government is confident that numbers will look up soon, thanks to a spate of reform measures announced recently.
The export performance in year 2012 December as compared to December 2011 has fallen by about 2% points. The deficit, which was about 5.9% up to April to November, has now become minus 5.5%. We expect in the current quarter, that is January to March 2013, there will be further improvement in the export performance of our country.
Time for a closer look at the markets. INFOSYS was, of course, the top gainer on the 50-share Nifty. Its outperformance lifted market sentiments in an otherwise rather flat day of trade. November IIP data disappointed the Wall Street. There was selling pressure that continued through the day. IT, tech and consumer durables were the only sectors really that traded in the green. Let me bring in my colleague Megha Chadha to give us a wrap of the day's trade. Megha.
Well, it ended up being a pretty tough session for the markets because the only bright spot really through the day came in from an INFOSYS. And what a sparkling start we had, in fact, to the third quarter earnings season. But if we talk about the benchmarks and the broader markets, weakness was the only word to describe it. In fact, by the time we wrapped up the session, we had the Nifty just about clinging on to that 5950 mark. And for the Sensex as well, we were at about 19,630. In terms of the broader markets, the mid-cap index, the small-cap index, a lot of sell-off pressure being witnessed in the broader markets as well. In fact, the IT index was the only one which ended in the green territory. The BSE IT index was up close to 9%. And of course, the biggest contributor here came in from INFOSYS, where the results surpassed all analyst expectations. In fact, we were expecting dollar revenues to come in around the $1,864 million mark. It came in at $1,911 million. In fact, the profit numbers as well also beat street expectations by a very wide margin. Not just that, the brokerage reactions also came out rather positively. In fact, CLSA said that the rally in INFOSYS could also, continue from these levels. So, given the INFOSYS results, we had a TCS as well ending up by close to 3% ahead of the numbers that will be coming out on Monday. Wipro as well as HCL were some of the other big movers on the Nifty. However, if we talk about the selling pressure then, and the Nifty, we saw Jayaprakash Associates and HUL, Kotak Mahindra Bank shaving off a fair bit of money. Not just that, cement was another pocket that saw a fair bit of selling pressure. And it wasn't just the frontliners here, whether we talk about ACC or Ambuja, but even some of the smaller mid-cap names, the likes of Mangalam Cement and Madras Cement also shaved off a good week. So the markets have ended on a bit of a tepid note as we've lost about 1%.
All right, Megha, thank you so much for rounding up the end of the week for us. Moving on to the rest of the news of the day, in what may seem like a stage set for an inevitable hike in fuel prices, the Congress core group will meet this evening to discuss the issue. Supriya Srinera, policy editor, joins us with details. Supriya, tell us what the agenda is for that meeting and what sort of hike do you expect to see by the end of the day?
You know, we are given to understand that the Congress core group is going to meet at 5:30 p.m. One of the things on the agenda is likely to be a fuel price hike that is likely to be deliberated and discussed. Remember, the Congress core group doesn't take the decision for the government, but this is the highest decision-making body of the Congress party. It's a very, very exclusive club within the party. It has members like Sonia Gandhi, the Finance Minister P. Chidambaram, besides, of course, the Prime Minister, Defence Minister, and only Ahmed Patel. So it's an exclusive, very exclusive club. They are likely to discuss the fuel price hike that is being suggested by the oil ministry. They're suggesting a hike of about 3 to 4.5 rupees per litre of diesel, a very steep hike of about 100 rupees on every cylinder of LPG being sold. Remember, the under-recoveries are huge, and the only way the government can get its finances in order if they manage to hike diesel prices. That is the biggest culprit. It contributes to almost 40% of the under-recoveries, and so it is only sane, it is only right on the government's part to go ahead as far as the fuel price hike is concerned. But that cannot happen with the political buy-in, and which is why we are given to understand that the Congress core group meeting will in fact be deliberating upon that issue today. A decision will of course follow only next week when the Union Cabinet approves it. But as indicated by Veerappa Moily just a short while back, oil prices are likely to go up, and they are likely to go up at the earliest.
The decision will be taken as quickly as possible. All our companies, OMCs, are in for making a lot of reforms so that there will be proper, appropriate, and the information system insofar as our consumers are concerned.
All right, Supriya, thank you so much for those details. We will of course be coming back to you next week to give us the latest on those fuel price hikes. Now moving on to Gujarat, in a mega show of strength for the Chief Minister Narendra Modi, his vibrant Gujarat Summit 2013 started off in style. India's top business leaders queuing up to be at his side. Corporate honchos Anil and Mukesh Ambani, Ratan Tata, Anand Mahindra, Gautam Adani were all praises for Modi. Anil Ambani in fact described him as a king among kings and went on to compare Narendra Modi with Mahatma Gandhi and Sardar Vallabhbhai Patel. So is India Inc. rooting for Modi to be BJP's prime ministerial candidate in the 2014 elections? Only time will tell.
We have committed over 100,000 crores, and in the next 3 years, we will again invest under your leadership this back into Gujarat. This will be invested in expanding our manufacturing facilities at Jamnagar, Hazira and Dahej. And this will provide significant employment and also strengthen our export competitiveness for India.
Narendra Bhai has the Arjuna-like clarity of vision and purpose. It is this overall combination of Narendra Bhai that has acted as a huge magnet for investors and entrepreneurs from India and across the world in the past decade. All of us are here to celebrate Narendra Bhai's leadership, his third time chief ministership. May I request and take this opportunity of requesting each one of you to give Narendra Bhai a standing ovation.
Very, very frequent comparisons made between Gujarat and China about how this state is efficient, focused on outcomes, focused on deliverables, brilliant in execution. But I want to tell you, ladies and gentlemen, that I think a day will come in the not too distant future when we will not only talk about the China model in Gujarat, but the Gujarat model in China.
Not only is Gujarat one of the fastest growing states in the country, but its example is being emulated across many states. Gujarat has made a remarkable overall progress.
I must just say that Gujarat is not just the fastest growing state in the country, but by that token, actually it becomes one of the fastest growing regions in the world. and we are today sitting in one of the fastest growing regions in the world. So we see growth coming from the largest and the biggest of projects being set up in Gujarat. We see the small and medium enterprises growing. We see the growth amongst the youth, and we see the growth in the villages and rural areas.
The leadership of one man has made all difference. Shri Narendra Bhai Modi. Today, Gujarat accounts for 17% of the nation's industrial output and 25% of India's exports.
All eyes on Gujarat this weekend. That's a wrap on this show. Thanks for watching. Stay with ET Now.